Good evening, everyone. Good evening, everyone. It's a Tuesday again, and we're back in the place. We're back in the place. So, welcome once again to your Tuesday video cast. My name is David Etienne, and so we're back here today. A quick little housekeeping matter. If I'm correct, and I think I am, next Tuesday will be July 4th, huh? Yeah, 4th of July. Next Tuesday, 4th of July. And therefore, we will not be meeting here at 8 p.m. next Tuesday. Because even if I'm here, you guys will not even pay any attention to me. So we're off next Tuesday as this is 4th of July. Great. So let's jump right into a little session here. Last week, we looked at employee retention tax credits, and as usual, I focused more on what I call the fundamentals, the anatomy of the process, meaning that there's a lot more to it, but at a level of basic understanding, we looked at some of the things that are what I call must knows, must understand, if you go in that direction. Now today, although it was not intentional that I have a second part to the presentation, a couple of things are worth noting. As a result of that, today I have sub-captioned or subtitled my video today as Let the Buyer Beware. And you know that is a good thing. Let the buyer beware. And you may be wondering, is there something nefarious, suspicious about this ERTC? No. Definitely not. Above board, you get your money, you go home happy, you do whatever you want with it in your business. There's no paying it back, nothing like that. So what is this Let the Buyer Beware all about? Here goes. Key points to note. Whether you're preparing the ERTC application yourself, or you have contracted with a provider, a specialist to do it for you. The focus here is, let me see if this person qualified. And if the answer is yes, let me see for how many quarters the person qualified. And then the process moves into calculating the amount that is due. You submit your claim, you get your money. So the focus is getting that application in so that you can get your ERTC money coming to you. Perfect. There's quite a bit more to the process. What I'm about to explain to you here are things that are worth noting. It does not necessarily mean that they will apply to every employer. It will be based on your specific situation, but you need to keep it in mind. So here goes. When you calculate your credit amount, there are a couple of things that needs to be kept in mind. One, let us say that, okay, first thing first, remember, when you had prepared your full year financial statement, your profit and loss statement for the year in which you're claiming the credit, you had gone on to use that P&L to prepare your business tax returns. That P&L naturally would have as one of the expenses deducted payroll information, salaries and wages, you name it, whatever it is. You would have had your payroll figure as one of the business deductions in that P&L to determine the final profit or loss shown on that P&L. It is the same P&L that you would have used to prepare your business tax returns. So let us say, for example, if your payroll bill in that P&L was $80,000, and if your bottom line after everything, your P&L show a profit of $100,000, then naturally, if that 80,000 payroll cost was not in the body of the P&L, you would not end up with that profit of 100,000 at the bottom. every deduction contributes to what the final profit will be. Okay? So it is so the 80,000 payroll cost is part of the overall deductions on the P&L that resulted in a bottom line profit of $100,000. Now, you are now claiming ERTC. We learned last week that if any payroll cost already reported sits in one of two areas, either you had already used it as part of your PPP forgiveness application, then you cannot use it a second time. You cannot use that payroll piece a second time to qualify for the ERTC, for this tax credit. So what you will find, or it is possible to find, that after you have done your ERTC computation and derive your number, it may become necessary for you to then have to go back to amend your business tax returns, because it may be required that you modify this 80,000 payroll cost that you got a write-off, that you wrote off back then. Because now you may not be entitled to that full 80,000 deduction that you thought that you had used back then. And so, yes, you calculate your ERTC, you're looking for your big fat check. But it is possible that based on your circumstances, you may need to amend your business tax returns. Let's look at two scenarios when it comes to the business tax returns. You may have filed what we call a C Corp tax returns. So you file a tax return as a corporation, a C Corp. Now we know the story with C Corp. C Corps pay their own taxes on their own profits. So if this company that has 100,000 bottom line as profit is a C Corp, then you would have calculated whatever it is, 28-30% of that 100,000, and that would have been the C Corp's tax bill. Now, if your ERTC calculations and applications require you to modify this payroll 80,000 down from 80 to 40,000, you'd have to now go and do an amended returns for that C Corp. So you no longer have a payroll deduction of 80,000. You now have a payroll deduction of 40,000 on that P&L for the purpose of the tax returns. What does that mean? If I'm reducing payroll costs by 80,000, then it means that my overall expenses has gone on by 80,000. So, whereas I had only reported I had reported 100,000 profit on the basis of which my company tax bill was calculated, now that I've reduced my payroll cost from 80 to 40,000, because it is a requirement of this ERTC qualification, because I can't use the money twice, I should not benefit from it twice. It means that my profit, instead of being 100,000, will now be what? 140,000. Why? Because initially I had 80,000 as payroll cost deducted as a business write-off. Now I have to modify the 80 to only become 40. So I have 40,000 less expense, and therefore my bottom line profit will go up by that 40,000. Simple arithmetic. So if you notice, whereas you had paid a corporate tax bill of so much money based on $100,000 profit, you now would have to do an amended return, which could result then in you recalculating your tax bill, which is now based on $140,000 profit. Why is that important? That is important because that is dipping into the kind of benefits that you're expecting to derive from the credit. Let's go to a different scenario. If, for example, you have, as a matter of fact, even before I move to that, let's speak a little bit more on the C Corp. It is hoped that the extent to which the payroll costs will be reduced, which will result in a higher tax bill, is such that the ERTC refund or credit that you're expecting to receive is still greater than the increase in your C Corp tax bill, or it would not make any sense. So, using some simple numbers again, when it was $100,000 profit because you had $80,000 payroll cost, let us say that it was 30% tax rate, and so your tax bill was $30,000. 30% of $100,000. Good. You now find that you need to amend this business tax returns because you have to modify the amount of salaries and wages cost, payroll costs that you deduct on the P&L. We said that you decide, okay, I have to reduce it from 80 to 40. As a result of that, my bottom line, my profit moves up from 100,000 to 140,000. Now I'm still using the same 30% of tax rate. So instead of 30% of 100,000, which is 30,000, I'm now talking about 30% of 140,000, which now becomes 3, 4, 12, 30, 42,000. Okay? So I have now moved up. So I have a little more tax to pay on the C Corp tax returns. So it will only make sense if any additional tax that I have to pay coming out of me having to modify my payroll bill, that number had better be such that the credit I'm expecting from the ERTC is greater than this increased tax. Then it will still be worth the while. I'm just making this point because a lot of us, may say, okay, yes, I apply for the credit. It is here, I'm getting $60,000. I'm happy, hippie hooray. And yes, in your case, it may be the end of the process. But this is possible that depending on what had transpired earlier on with maybe PPP that you received, the forgiveness of the PPP, you may find that you fall in the category that is requiring a modified or an amended tax returns to be prepared. And if you're a C corporation, that corporation would have had its own tax bill, and so with that adjustment in the P&L, that modification or amended return possibly is going to end up with a little more tax bill, a little higher tax bill. Is that increased tax bill less than the credit you're expecting to receive through the ERT? If the answer is yes, still worth the while. Let's now move to the other possibility, where the tax returns that you filed was an S Corp, an S Corp tax returns. You will remember, for S Corp owners, you will be aware of this. For others, you will learn that S corporations are referred to as pass-through entities. So unlike a C Corp, S corporations are not tax-paying structures, business structures. What they do, they take the profit, they take the revenue, they minus all the expenses, and they come down again to a bottom line. Using the same number, let us say this company that make the $100,000 profit with an $80,000 tax, with an $80,000 payroll bill was an S Corp, assuming it was an S Corp. Now, in this case, there would be no 30% tax calculated on the 100,000 because S corporations do not deal with that direct tax to the company. However, the $100,000 would have been transferred via, that document called a K1, would have been transferred from the S corporation tax returns onto your personal, you the owner of the business, your personal individual tax returns. And that is where that 100,000 would now be additional income to you. I'm saying additional because chances are you have other income on your individual tax returns, maybe some W-2 salary, something from elsewhere, dividends, etc., etc. But that is an additional revenue income to you that is flowing from your S corporation to your personal tax returns. Cool. So again, because you had moved 100,000 via the K1 from S corp to personal, it means that the overall calculation of your personal tax bill was based on, among other things, $100,000 profit from the S corporation. Same scenario. If you had to modify the payroll figure from 80,000 to 40,000, then the profit on that S corp would no longer be 100,000, it would be 140,000. So 140,000 is what would be the correct number that needs to be transferred to your personal tax returns. So what you find that if this applies to you, not only would you need to modify your business tax returns, but because the K1 brings that profit on the personal, you would now need to modify or to amend your personal tax returns because you're going to end up with a different K1 money value. Instead of 100,000, you're now going to have 140,000 coming across. And so the total income on your 1040 will now increase by an additional 40,000, which is the reduction in the payroll figure. Naturally, again, there's tax considerations. So whatever your tax bill was when you just filed your taxes, you'll realize that, okay, an amended personal tax returns that is now showing $40,000 more income is likely to end up with a higher tax bill. And note, not only is it gonna be a higher tax bill because there's more income to report. Note this also. There are certain credits that from which you may have benefited by virtue of the level of income that was reported on your personal tax returns. Let's go extreme. Let us say that overall you ended up getting earned income credit. Let's say you end up getting, different credits that are income based, income driven, income determined, where as the income increase, the amount of credit decrease. And if it keeps increasing, you may find that you reach a point where you no longer benefit from any of these credits. Let's assume that when you first did your personal tax returns, you had benefited from some of these credits because that $100,000 that you initially transferred on the K1 was such that it qualified you, it allowed you to benefit from these credits. But what if, theoretically, $130,000 income is an income level that would disqualify you from all these credits? Just using numbers here for illustration. It means that since that income has increased by 40,000, because the K1 is now showing 140 instead of 100,000, it means that you would have reached an income level on the personal that put you way outside of the income band where you qualify for these credits. So again, that amended personal tax returns would end up showing a higher tax bill, or if you got a refund, a lower refund due to what? One, there's more income, but also that greater income may have the impact of reducing or totally eliminating some of the income-driven, income-determined credits to which you were entitled when you initially filed your tax returns. So when I use the term let the buyer beware, you're the company, it's your business, you hear about ERTC, and all you can hear about is really positive, positive, and it is true. It's all positive, positive, positive. Rosy dandy. There's a saying, the devil is in the details. The devil is in the details. Okay? Quite often, there usually elements of a situation that is not as obvious, evident, immediate. And so those things tend to be overlooked, either conveniently or just because you're just not aware. Now, as I said earlier on, a number of these things a number of these potential amendments and implications may not apply to you. But if you are one who had received PPP, received forgiveness of PPP, which I think is everybody received forgiveness of PPP, then you, in making that forgiveness application and submitting it, would have to indicate what specific salary payment you're using as justification for the forgiveness. So in other words, you're saying, in quarter 2 of 2021, I spent $25,800 on salary, but $20,000 of that figure came directly from the PPP that I received. Why are you doing that? Because that was one of the requirements. You're to show, you're to illustrate, demonstrate how, where specifically you had utilized your PPP loan. And you're allowed to use it for payroll and other, admin costs. But most people would have had payroll bill large enough to absorb it all. So if for a certain quarter you had used 20,000, well, let me just keep the same 40,000 for what it's worth. You had used 40,000 of PPP money to pay those bills, and you received forgiveness because in your claim you indicated, yes, this 40,000 we're using this quarter, then naturally. And remember too, that although you're forgiven, you're also allowed to take the total payroll bill as a tax deduction on your tax returns. So that 40,000 is included in the deduction, but you already got forgiveness for this 40,000 through the PPP administration stuff. If you are such, you need to be careful to look at it to see if it is necessary for you to do an amendment. It may be that you only need to amend your business tax returns, especially if you're just a C corporation. Because remember, we are C corporation, no profit is really transferred onto your personal to be taxed. No, the company, the C corp, would bear its own tax bill. Then the after tax money of this C corp is really what we would call, money available for distribution to you, the owner. So if you want to call it dividend, whatever the case is, it is after tax money because the company already deal with that. S corporation, totally different picture. All of that profit would have been transferred over to your personal, and as I said earlier on, it may require not only an amendment of the S corporation tax returns, but it may also require an amendment of your personal tax returns. The crux of the matter is, given those potential additional costs, is it still financially wise, worthwhile for me to go through with applying for my ERTC? In most instances, the answer is yes. Why? Because you see, the payout, especially if you have quite a number of staff, I suppose, the payout is substantial. And so I would assume that even for those companies that have to do amendment and pay additional taxes, the credit would more than likely far outweigh that additional cost. But Numbers don't lie. At the end of the day, it comes down to the numbers. So if you find that you only qualify for, say, 10, 15, $20,000 of credit, then you just need to do a little careful calculation and see, would I need to do those amendments? And if the answer is yes, are there potential additional taxes to be considered for those amendments? And if the answer is yes, how does the additional tax bill compare to what I'm expecting as the credit to come to me? All right. So that again is something that we need to be very careful about. So I thought I would, as I said, subtitle my this evening's thing as "Let the buyer beware." In this case, you, the employer, beware. Not because there's anything lurking in the dark waiting to pounce at you, but just beware because there are some information that could impact you, and you need to know about them and to ascertain whether or not it is something that is going to be, you're going to need to address. All right. So as I start, so I end. I said earlier at the beginning, whether you prepare your ERTC application yourself or you ask one of those providers to do it, quite likely the emphasis and the selling argument is going to be focused strictly on you qualifying and how much money you can get. I think a secondary conversation, and this will be had by the more reputable providers, they will definitely explain to you that these are additional considerations that you need to keep in mind, and they would even go further to look at your numbers to determine whether or not those amendment activities are necessary in your case. All right, cool. So that is it for me and I think this basically wraps it up, the employee retention tax credit. I'm just sort of quickly swirling in my head to see if there's something else that I would want to quickly point out to you on that. No, I can't think of anything else, but yeah, but that should, between last week's presentation and what we have discussed today, it should put you on sound footing to go forward and do your stuff. Okay. Well, guys, as I said, next Tuesday is 4th of July, fireworks time. So we'll not be meeting here at Etienne's place, so for Tuesday video cast, but I should see you the following Tuesday. So enjoy yourself, be safe throughout the holiday. I know a lot of us gonna hook up and hang with families and friends. In all that you do, be safe, be careful, and continue to work hard, be successful, be a great businessman, businesswoman. But at the heart of it all, I always have to close by telling you, hold on to the faith, and trust the Father to guide you in all that you do. Sin. So that's it for me. David Etienne saying bye for now, and remember now, check out my YouTube channel, Etienne's Place. It's all there. All our Tuesday video cast, all our standalone videos on a myriad of topics. So check it out, like, subscribe, share, hit notification, join so that you're notified as to when other things are, new stuff's coming up. Oh yeah, and the last thing, I announced it last week and I'll repeat today that we have launched, we intend to have an official launch, but I call it a soft launch. We have launched our new division, which is Etienne Strategic Management Consulting. Etienne Strategic Management Consulting. That's a new division that we launched, and the primary focus here is exactly what the name said, to basically look at business management from a strategic perspective. Why? Because as small businesses recognize that, okay, these things that we thought were macro factors, big things that the big companies need to deal with, and we do not need to spend time factoring those things into our planning. Small businesses are realizing more and more that no, it doesn't work that way. We are part of the big marketplace, and so we have to be aware and respond to these challenges. And so small businesses are coming into the arena where we say it is important for us not to manage in a knee-jerk manner, but to manage in a very strategic manner, having a clear vision, a clear goal, a clear business model, a clear path as to where we want to go and how we're going to get there. And sensitizing ourselves to the various obstacles that inevitably will come along that journey, and then strategically manage the process. Hence, Etienne Strategic Management Consulting. And so you'll be hearing more of this about this, and we'll be interacting on this level from time to time. So that's it for me, guys. Enjoy yourself. And David Etienne saying over and out.